What's going on? Welcome back to the channel. So today we're going to talk to you about ticker DE. They did recently drop their earnings. I want to go over the absolute key highlights from the earnings that you need to kind of take away, what the data points are saying, and just what analysts are thinking. Before getting to any of that, make sure you guys hit that thumbs up. And with that, let's get right to it. So Friday, it did go up 3%, closing at $480 as the market's kind of digesting their earnings. Looking at their actual numbers, they did miss on both earnings per share and revenue, so they missed by 1.09 billion. I'm going to go over the future guidance and everything at the end of the video, but aside from that, looking at the implied move, it was anticipated to be roughly 3.93%, so it did ultimately stay within the parameters of that, so that's kind of a good thing. Mixed data going into the earnings as well. And looking at shorts, they didn't really have any crazy swings. They somewhat maintained their position, so they were somewhat impartial on the earnings, not really making any bet. Sometimes you do see them increasing or decreasing leading into a big event, but in this case they didn't really do all that much. On a side note, this isn't a squeeze play. I'm just bringing this up more for analysis purposes, but 2% of the free floats being shorted works out to be 5.43 million shares overall are being shorted. Moving over to the options, you can kind of see right here that there is a consensus for it to be roughly around this upcoming week, around that 495 to 500. So definitely a fairly good continuation of good momentum. Bears on the other side, or kind of on the other hand, are anticipating for it to be between that roughly like 470 to 480 range. So there is definitely a lot more upside anticipated right now. With that 480 and change, it is trading between this R1 and the pivot. 455 is going to be a strong support. Flip side, 486 is going to be the next strong target / resistance point. So let me know your viewpoint on that. Aside from that, 506 and then 537 are going to be the following kind of targets and resistance points. Looking at what analysts are forecasting though, you have the new highest rating at $542. So there was that one that came in from D.A. Davidson, Michael, who has a 40% success rating, so not all that great. 501 by Robert Bard. Analyst has a 54% success rating. You have 475, 476. So overall, I think pretty good stuff. As a consensus of all the ratings, though, you do have $480.23 the price target, and that is oddly enough a negative downside. So analysts are bullish on the stock and the earnings, but clearly not as a broad consensus. So let me know your viewpoint on that. When it comes down to this, on a side note though, this 480, that's also encumbering a lot of these $400 price targets that was done a while ago. That's really dragging it down. So I think overall analysts are somewhat optimistic. Let me know your viewpoint on that. And then as well, if you do want this information to be completely free, so analyst ratings, forecasts, ownership, short selling, everything that you need, take a look at IBKR, link in the description below and also the comments. Sign up, it's free, a lot of good information here. But aside from all of that though, let's go over the future guidance and everything that you need to know. But first off, give yourself a shout out if you did buy or if you sold or whatever else. So definitely let me know your viewpoint on that. And with that, let's get right to it.
Deere projects $5 B minus 5.5 billion net income for fiscal 2025 amid inventory management focus. Earnings call insights Deere and Company DE Q1 2025 management view. Chief Financial Officer Josh Jepsen highlighted that Deere and Company completed Q1 with a 7.7% margin for equipment operations. Net sales and revenues were reported at $8.8 billion, while net sales from equipment operations amounted to $6.809 billion. Net income attributable to the company was $869 million, or $3.19 per diluted share, which included $163 million in discrete tax benefits. Lower shipment volumes negatively impacted all core segments. Production and precision ag sales dropped 37% year over year to $3.67 billion, with an 11% operating margin, driven by reduced shipment volumes and sales mix. Similarly, small ag and turf net sales were down 28%, totaling $1.748 billion, with a 7.1% operating margin. Construction and forestry saw a 38% decline in net sales to $1.994 billion, with an operating margin of 3.3%, primarily affected by planned underproduction to reduce field inventory levels. Jepsen emphasized disciplined cost management, including favorable production costs and reduced overheads. while maintaining operational efficiency and investment in key technologies. Outlook. Deere maintained its fiscal 2025 net income guidance of $5 billion to $5.5 billion. Equipment operations cash flow is guided between $4.5 billion and $5.5 billion. Production and precision ag net sales are forecasted to decline by 15% to 20%, with an operating margin between 16% and 17%. The segment anticipates 1% positive price realization, offset by a 2.5% negative currency impact. Small ag and turf is expected to experience a 10% sales decline, with an operating margin ranging between 13% and 14%. Construction and forestry net sales are projected to decline by 10% to 15%, with an operating margin of 11.5% to 12.5%. Management noted ongoing price pressures in the segment but highlighted strong execution on cost controls. Financial results. Analysts estimated Q1 revenues at $7.89 billion and EPS at 3.26. Deere reported $8.8 billion in revenues and 3.19 in EPS. Lower volumes across segments, currency headwinds, and planned underproduction contributed to the declines. Favorable production costs offset some pressures, with reduced material costs and overheads playing a key role in margins. Tim Thien, Raymond James, questioned large ag production cadence and seasonal ramp-ups. Josh Beal clarified that sales would align with normal seasonality, with the second quarter expected to be the highest in sales. Stephen Volkmann, Jefferies asked about early order program performance and confidence in demand stabilization. Jepsen noted inventory reductions and locked-in combine orders as key indicators. Jerry Revich, Goldman Sachs, inquired about precision ag adoption globally. Management highlighted 455 million engaged acres globally, with South America showing 20% year-over-year growth. Jamie Cook, Truist Securities, sought clarity on margin performance relative to mid-cycle targets. Jepsen emphasized structural improvements, noting operating margins of 4.5% at trough levels. Sentiment analysis. Analysts expressed skepticism about market recovery timelines, reflecting concerns over macro uncertainty and weakened order velocities. Questions often pressed management on inventory and pricing strategies. Management maintained a confident tone, emphasizing cost controls, proactive inventory management, and investments in technology. Phrases such as, "We feel great about the progress," and "we are confident," reflected their optimism. Compared to the previous quarter, analysts appeared more focused on understanding demand stabilization and future inventory strategies, while management showed consistent confidence in its ability to navigate challenging market conditions. Quarter-over-quarter comparison. In Q4 2024, Deere reported stronger operating margins of 13.1% for equipment operations, reflecting improved results relative to the 7.7% margin in Q1 2025. Guidance remained consistent for fiscal 2025 net income and segment performance, with additional emphasis in Q1 on the impact of currency headwinds and shipment timing. Analysts in Q1 were more concerned with inventory and demand stabilization, whereas Q4 discussions had a stronger focus on margin resilience and operational efficiency. Risks and concerns. Management highlighted macro uncertainties, including high interest rates, weaker order velocities, and elevated used inventory levels. Analysts raised questions about Deere's ability to manage pricing pressures, particularly in construction and forestry, and the potential long-term impact of macroeconomic headwinds on demand. Deere's mitigation strategies include proactive inventory management, targeted incentives, and continued cost discipline. Final takeaway. Deere & Company's Q1 2025 earnings call emphasized disciplined cost management and proactive inventory reductions across segments. While quarterly results reflected significant volume declines, management maintained fiscal 2025 net income guidance at $5 billion to $5.5 billion, supported by investments in technology and operational efficiency. Analysts focused heavily on inventory levels and demand stabilization, reflecting ongoing macroeconomic uncertainties.